A lot of liquidations have happened. Biggest liquidation, largest liquidation in the history of crypto. What was it 20 billion? Some estimates have it as high as 30 billion, 7 billion from Hyperliquid alone wiped out. Who were the winners there? Obviously the exchanges. I think we saw the A book, B book rebalancing. So A book, if you guys don't know, is basically the exchange taking this out of the trade. So when you open a long, they're effectively short, and vice versa. When you lose, they win. When they win, you lose. And then the B book is where your trades are actually routed through like real on-chain liquidity or even like SEX liquidity of actual assets. So when there's too much, yeah. Hey, Mara, how you doing?
Hey, how's it going? What are we
good.
talking about?
No, my audio. I have to reroute to the wrong place. Wait, say something again.
Hello.
Okay, perfect. I was able to click a button and it solved all my problems. I was saying that, the great rebalancing of, what was it? Was the great crash of a couple days ago? Was it Friday? When was that?
Yeah, the great crash of October 11th, 2025. It will be remembered in the lores, the annals of history of all the degen traders.
Well, there was another massive crash like that.
2021.
Yeah, remember that?
Yeah, I remember that. Yeah, it was crazy.
It wasn't really
Everything
tariffs.
just
It was like there was
cliff.
no news. It just was a crash.
Flash crash. Yep. I mean, this was basically no news. Also, I mean, I know
there was tariff adjacent.
ETH is famously made of aluminum, and so very like sensitive to
tariffs.
Tariffs and stuff like that.
Yeah.
But yeah. Besides that, I mean,
did you read? Someone did a post about like the the rebalancing of the A book B book.
Is this you're talking about like in a auto deleveraging situation?
Yeah, exactly. This is what caused the auto deleveraging.
So didn't read that about A book versus B book. I mean, it sounds like, are you talking about how people who were long assets and then we had this crash and then they were like, needed to be liquidated, and you had someone who, you have to have for every liquidation that happens, you have to have someone buying on the other side, but the order books were just completely wiped out. And so there was no one bidding. So they had
the market
to
makers pulled their liquidity because they sensed the systemic risk right before it, making liquidity paper thin right before the crash.
Really? I didn't hear about that everyone pulled their liquidity. Because a bunch of market makers got wiped out. So like, how does that make sense?
Did they though? I mean, have you heard any names of people who actually got wiped?
I've heard a little rumblings here and there. I mean, not that people got like zeroed, but like people, lost 10, 20% of their books and stuff like that. I mean, who else has $20 billion to lose? I mean, you think that's all just like retail? Like you think that doesn't include $20 billion
in paper though? I mean, I guess, if it's liquidations, I guess it's real because that's 20 million. So when they say 20 billion is liquidated, do they mean 20 billion in margin or 20 billion in like loss of notional value?
And that's an excellent question that I haven't fully considered.
Because if it's notional value, then obviously it's like a leverage number. I mean, even still, you're probably only going to be an average of 2 something leverage. There's still probably $10 billion wiped out.
Yeah. I hadn't thought about that, whether it's a notional value or that's like the margin value of what's getting liquidated. Now that you've said it, it probably is the notional value. I mean, that feels like the right number because it's a little bit, disingenuous to use that number, but it feels like the number that the crypto industry would use because it's bigger and scarier. And that's always good. But yeah, did you weather the storm? Did you have any positions open for the big crash?
Yeah, so I only had one long. Well, I mean, I have a few like small alt bags that make up less than less than 20 bips of my portfolio. But my largest long position my only real substantial long position is Bitcoin, and I have about 20 to 25% exposure there. And so, no, I did pretty well. My max drawdown was like 3% of my portfolio. I had a 3% down day. And then
so this is like a money market position where you're collateralizing Bitcoin and borrowing.
Exactly right. Yeah. I'm collateralizing wrap Bitcoin and I'm borrowing USDC.
And how much of a buffer do you give yourself for that typically?
My liquidation level is 76K.
Oh, okay. Yeah, that's pretty safe. And,
so pretty safe, yeah.
Yeah, and what do you use? Are you like a Morpho guy, a Fluid guy?
I'm using Morpho. I know you're a Fluid maxi, and I do agree that Fluid has one of the best liquidation mechanisms, or like soft liquidations. And Aave, actually, the rates on Aave may have even been more competitive than Morpho for a while now. The benefit to Morpho, though, is that Morpho has one of the highest LLTVs, meaning that you have more of a liquidation buffer. And that, to me, was more important than rates.
LLTVs is definitely the most important thing in this. Like people prioritize yield. They're like, oh, let me hold, for example, wrap staked ETH rather than, ETH, and they think that
they don't realize
2 or 3% yield is going to make a difference. It doesn't. It is much better to protect yourself over getting some yield in this kind of case. It used to be that Fluid had the highest LLTVs, but maybe Morpho's come back and is.
I think Morpho is 80. It's either 87.5 or 88.5, which is fairly high. I don't think does Fluid break 90.
I thought Fluid was like 88, maybe. It sounds very comparable. Well, let me go take a look.
So are we doing another? Are we like retesting the flash crash? Looks like everything is going down right now.
It's not. So for Bitcoin, wrapped Bitcoin against USDC, it is 90. So this is just another discriminatory case. Stephen discriminating against Fluid.
Oh, is it 90? Is it really?
Yeah, where Fluid actually does have the better position, or like LLTVs and stuff.
What's the borrow cost?
It is 5.46%.
Okay, so Morpho barely beats it at that. So you said it was 90?
Yeah. It's 85% collateral factor and 90% liquidation threshold.
All right.
It's been the best place to borrow against Bitcoin for a year now.
Yeah, this is 86. So that's substantially better on Fluid.
Yeah, and it makes a big difference. I mean, if you have a flash crash situation, 4% could be a lot. And then the other thing which really matters, it's funny that I always end up actually talking about Fluid stuff. But the big thing is it also only has a 1% like a liquidation penalty, whereas I would imagine this is like 4 or 5%. So, if you get liquidated, you get hit harder than if you like on Morpho, especially on Aave, you definitely do. But Fluid, has that really kind of favorable, liquidation penalty.
Yeah. Which is one of the so the value of my collateral would have to go down to being worth 71K, which would be a massive crash because I have 1.25 Bitcoin. So anyways, that's where I'm at. That was the only long exposure I had in my drawdown, and maybe I'll move it to Fluid. Fluid probably doesn't have a migrate button. All these sneaky. So like Morpho, I think Fluid might have one. They let them migrate directly from Aave, which is kind of sneaky, and they usually tell you it's better. It's not always better, but maybe I'll make the jump to Fluid. How did you weather the storm? I know you typically have more long exposure than I do.
Yeah, I mean, my long exposure was all in spot, so no liquidations, right? So that was nice. The only perk positions I had were shorts, where I was just basis trading, things like Hype and Pump and a few other things like that. I did have some auto deleveraging on Hyperliquid,
but didn't it sell the short until the bottom for you?
Yeah, no, it's great. I mean, I was actually like it was like Friday evening. I was like hanging out with my little baby, and I was like not very focused on the markets, and it was probably a good thing because like when it happened, it like crashed, and I was not paying attention, and it auto deleveraged me, like not exactly at the bottom, but pretty close to the bottom. So I like benefited from with the drawdown, and then all these assets and rebounded, and so when I came back to reposition again, the long side, my spot side had recovered quite a bit as well. So it worked out good. I mean, I feel a bit guilty saying that because there's so many people that lost very substantial amounts of money. So yeah, I mean, for me at least, went okay. For a lot of people, not so much. I see here you're showing us yield basis. Yield basis, the demand for it seems to be wild. I mean, they went from $30 million. You
said the word basis, so it made me hop over here.
Oh, okay. $30 million supply cap to now $150 million. I think this just opened like a couple hours ago, and it's already fully, I guess not fully, like there's still, you could sneak in a couple.
It's virtually, yeah. I mean, all but filled. So you're saying these caps raised from like 30 million each to now 50 million each?
No, they raised from 10 million each to 50 million each. Yeah.
Big difference.
Big difference. Yeah.
Yeah. I mean, good for them. I'm still not completely sold by the mechanism. It doesn't seem like the APRs are out of this world. They're like 7 to 8%, which is really good for a Bitcoin yield, but I still question whether or not it should be called a Bitcoin yield.
Well, they weathered this storm, apparently. I read a bit about like what Mitch had said about all this stuff, and apparently they did not have any losses, or, they kept the strategy I don't even quite call it hedged, or they kept the delta of the strategy, maybe is the right way of putting it. And yeah, I mean, I think that they generated quite a bit of yield over the weekend during the crash and did not take any losses. So I don't know. It seems to be, as far as I can see so far, it seems
that
to
is
be
pretty
working.
impressive. That is, and also one TBDC. Did they start at one? Because that would mean they already made a pretty substantial yield. I mean, if it's only like 2% ROI already, no, 1.6%. Is that true?
I think so. I think that's right.
Yeah, curve.
I think that's right.
Like over 12% annualized though, because they've only been live for like a month.
I think they made like a couple percent on Friday, kind of thing. So that helped. You know, it's like being there during the volatility. Are you looking at curve right now? Because we can only see.
Yeah. I just go to right. I want to make sure I was on the right website before I let anyone astray. So if you type in YB, you get all these assets.
Yeah.
YB, TBD. Oh my gosh. Yeah. So first of all, don't believe the lies. I'm not saying they're lies because they're a liar. I'm saying that these are lies because they're likely a 7-day average, meaning they're accounting for the crazy volume and volatility of Friday. Well, even today, I guess. I mean, today's
I think that the reason that these are actually so high is because you had $10 million
aping
you had like $120 million aping in $30 million of liquidity, and there were swap fees that were generated, and that is another reason why these APRs.
I think they were maybe inflated, and also we went from like 15K back to 11K, which is a ton of volatility, which typically means a lot of volume as well.
Yeah, so I think that these did quite well. I mean, you should look into this, for yourselves, listeners, and make sure that like they did perform. But everything I've heard is they performed quite well through the drawdown, and then
this is a daily.
Yeah, it's daily because people are depositing in, and so there is like a slippage that happens and like fees that are generated when the deposits are happening. So
good for them.
Yeah.
I mean, so it is cool. So the way that yield basis works for those of you guys who don't know, I have to remember how this works. Basically, they take your TBTC, they mint effectively an equal amount of Curve USD against it, or like collateralized by it. They pair it as an LP, and then they borrow against that as Curve. No. Sorry, they sell half of it, borrow half, and then convert that to TBTC. There's a way in which they make the delta equal. Effectively, it's LPing. It's pseudo delta neutral LPing. I'm not sure exactly when the borrowed CRV USD comes into play, but the borrowed CRV USD converts into more of TBTC to make the delta effectively equal.
Yep. That sounds like a pretty good description of it. One interesting thing is that it is
sloppy, but go ahead.
It is trading on pre-markets. I'm going to send you the link for it. I mean, this is now a throwback to Wales market.
What was the other one that we liked a lot back in the day that starts with an A?
The pre-trading platform, or what do you mean? Yeah.
There's Wales, which always looked really good, but didn't work very well. And then there was an Avo. Right?
Avo. Yeah. I haven't checked Avo. It is on Wales market. There has been about $4 million in volume. It's trading at a $950 million implied FTV. It was even higher. It was, I think, all the way up to like $1.6 billion FTV, and it's come down.
950 million FTV.
Yeah, I mean, this is half of what it was not that long ago. I mean, it was on the 11th. It was at 1.6 billion.
That's insane.
There's an appetite for this thing. There's been a ton of like. Their ICO thing on Legion did super duper well. I think they're doing another ICO on Binance.
They were only raising like 5 million. They had like 200 million in commits or something.
Yeah, exactly. So, I guess my point is there's a lot of demand for this. The other thing is, I think once this thing gets up and rolling, I think I'm remembering this correctly. You can also choose either to earn the underlying yield of the strategy or to earn emissions in the token. So you can choose which one you want. Yes. And so it may also be a situation where the APR is being inflated because people are choosing, like the emissions of the YB token over the actual underlying yield itself. So that could be another reason.
You can't do that yet though, right?
I don't think you can do that yet, but I think that's how the system will eventually work. I hope that wasn't alpha. I wasn't supposed to say, but yes, I think that's how eventually the system will be working. And they also have, like, of course, a VE tokenomics system, which actually, I think if you go back, no, I think it does work that way. So if you go back to the earn section and you click on one of the assets.
Yeah, I didn't see it.
You can see here trading.
Yeah.
Trading vault and token vault.
Pre-mine the tokens, I guess.
Exactly right. So people are choosing to pre-mine the token. So it's interesting to see the ratios here. The other one, the TBDC one you had, was actually a very different ratio, but this one is 40, or I guess this is like 84% of people are earning just the swap fees, and then you have like 14-15% of people that are instead, deciding to earn just the
and
token.
at that valuation, I would be farming the token.
Yeah.
I mean, any meaningful amount of emissions there would be probably huge. Well, that's cool. I'm glad we looked at it. Caps increased today, got immediately filled. If you want to be the last 0.00,
really, really filled.
Actually, a couple of these are not. Well, maybe, yeah, they probably are. It's one of those things where
there was
it's like $50 million valued at a certain Bitcoin price, and now Bitcoin price is going down, but the capacity is not increasing.
That's right. Okay, so yeah, I mean, just a second ago, that other one said 49.7, and so there was some room, but maybe one of the folks listening to the stream saw this and jumped in. You never know.
I know, I'm trying to see, like, how much could you put in? Yeah, you can't put it in. You can't even put in 0.1. You could put in 0.01 though. So if you want to go in there and put in, what is that, about $1,000 of TBDC and farm some token yield, you could be the last one in. Which isn't, I mean, that's not terrible, right?
No.
So anyways, that's yield basis. It is kind of cool. I am only more, it's one of those vanity metrics where I'm like, man, this thing probably isn't going to work. And then I look at this valuation like, oh, this thing is going to be awesome because other people believe in it. And now it makes me more bullish. I mean, it is Mitch, but I don't know, man. We've seen pseudo delta neutral farming not work ever in the past. Like not even a single time. So I want it to work though.
Well, and I mean, what I would say is,
like, it was like, if anyone can make it work, it's going to be Mitch.
Yeah. Well, and like, what are you worried about? Like, I mean, I guess that's too strong.
So
putting it.
What I'm worried about,
they went through,
was tested against this week, which is
right. That's what I'm saying. Like, they went through like one of the worst crashes in the history of crypto, and they seem to, according to them, I haven't like independently verified it, so that's why I'm a little bit caveat it, like giving it a caveat. But according to them, they weathered the storm. They didn't have any losses. The system worked as intended. And I mean, I shouldn't say this, but like we don't expect worse and worse and worse crashes than that. I mean, that was like the worst that's ever happened in history. I guess it could get worse, but you would expect market volatility to not be, 70% down on some tokens.
But that's not necessarily the worst case scenario for them, right? Because it snaps down, and I think they're pretty much full range liquidity, and then it snapped back almost to where it was over a couple of days, and now it's gone back down. That's not what scares me as much. Well, I mean, if it was auto rebalancing, then that should be scary. But the thing that scares me is where you have price volatility off-chain and low volume on-chain. Like, that's the worst case scenario for them, because then you're rebalancing with not as much volume going through your swaps or your liquidity.
Right. I mean, I guess the other one.
Mitch's counterpoint was that, like, it's mostly arbitrage anyways. Like, they're mostly routing arbitrage swaps anyways, which is normalizing price behavior.
Right. It makes sense. I mean, I guess the other thing that, like, if you had a very fast, like, volatility either to the upside or the downside that didn't just, like, mean revert. It just, like, we went from 120 to 50K in 3 days and just stayed at 50K. There could be some weird impermanent lossing thing as well.
That's true. I also wonder what I wonder if we can see when they rebalanced. If they have like metrics. I don't think they show that, but that would be cool to see. Anyways, I know we spent a lot of time on yield basis, but now you've wet my whistle for it. Someone go snag that last 1K. This is the secret alpha. There's a little bit of space in there, and again, I would go for token yield just because of that valuation. I think that this is kind of like a season 1 airdrop. I know they did raise, so it's not like, it's a no raise, no VC type thing. Mitch always raises for his projects as far as I understand. And yeah, so that's pretty cool. I was going to show Rumble. Have you checked out Rumble in a while?
No, I haven't.
I know we're jumping all over the place, but man, they need a dark mode. The reason why I went over to Rumble is because they brought on the YTs. And if you remember from back in the day, the cool thing about Rumble with YTs is that it's literally just an arbitrage play. You can purchase the YT for some IY, right? Let's just say you're purchasing it for 30% IY. Actually, you're probably purchasing it for 20% IY here. And you can sell it, on a week-over-week basis for 52%. Now, that's effectively the same thing as like buying something for $3 and then being allowed to slowly sell pieces of it at $5 per share over time. And so that's a massive arbitrage opportunity. You don't have to actually wait on the points. You know, you're not waiting for the airdrop to realize that difference between the actual point value, I guess you'd say, or like the actual token value when the airdrop happens and the implied yield. So that's what I've liked. And so, I mean, we can do the math here. You do have to remember your YTs are going to zero, right? YTs do go to zero, but you purchased it for $3. It's going to like expire to zero. In the meantime, you can sell it for $5 over the time. So by the time it does expire at zero, you will have converted that $3 into $5, all else equal. That makes sense?
It does make sense. You know, it makes me uncomfortable. I know this is your kind of gambit. It makes me uncomfortable for a few reasons. One, you know,
liquidity.
There's thin liquidity to get out. I mean, I guess I was thinking that like you enter Rumple and then like if you just held, I guess you could like worst case, you still have to want to be long on the points, right? So you could like buy the YTs, be long on the points, and start, you know, getting out of the position as best as you can through liquidity as you thought it was profitable. And then if the liquidity fell off, you know, like the price dropped dramatically outside of what you know, were comfortable with, then you would just hold them until maturity and just get the airdrop, right? So I guess it just gives you I guess this is what I would say. For anyone who's a YT holder, they should be doing this. Like this is only favorable if you're a YT holder.
I mean, there are some caveats.
Is it fees? Are there fees? Is that what?
Well, there's a small cut, but the caveat is that there's like a period where the points you're getting aren't showing up. So like if you deposit today, you may have to wait until next Thursday to see your first round of points, and then you only get those points given to you like once a week. So that's the one kind of annoying thing. The second is that if they do not do a linear airdrop, if it's like, you know, minimum wallet gets this or something, they socialize the value of all participants.
Yeah.
And make it linear.
I mean, I guess the other thing is like, there's so many layers of abstraction. Like, I'm curious who the person is buying the points on the other side. Like, who's the person that's not buying YTs but is taking it even a step further and buying points from YTs?
You can still buy hearts, which is crazy to me.
Yeah. What's the deal with that? Do we know when that?
It's supposed to be in September, but I would not be surprised if it's like December, January at this point. Hopefully it's tomorrow. You know, it's one of those things. But the price is at 35 cents, which is actually pretty good. It's around 50 million FTV. So maybe not that great for Hyperbeat, but yeah, you can still buy these things. So if you missed out on farming hearts and all of a sudden you're super bullish on it, you can go and purchase these things off of Hyperswap. But I think the ones that were more interesting were it's pending now. Ooh, actually, that's kind of it. So Kinetic is pending. Did it already happen? Did they already close their season and like do the airdrop or something?
They haven't done the airdrop. I think they may have closed the season. Same thing with Felix is pending too.
The market is pending. Points have not been released yet, so trading is not available. Current liquidity is buy side only. Oh, well, okay. We're working with yeah. So I know Kinetic points are historically really hard to buy or like to get access to. So that'd be kind of cool to potentially pick some up at. And yeah, Felix also pending, which is strange. But there you go.
$10 a point for Kinetic?
To $11 a point, yeah.
Wow, crazy.
Yeah. So hopefully it's true. I mean, I don't know how many points you have, but it could be a nice airdrop.
Yeah. I do have exposure to this. This is part of my strategy for what I was talking about earlier, which was shorting hype and then farming indulge neutrally across pendulum stuff. So I think I have Kinetic or K-Hype LPs.
Now, are you using Drift for the better funding rate, or are you using something like Aster or Lighter or whatever else?
I'm all over the place. I'm all, yeah. I'm on Hyperliquid. I'm on Aster. I'm on Lighter. I'm not on Drift. I'm thinking about opening a position on Pacifica, which is a new one. I don't know. I'm kind of of a few minds. One, it's like we went through perp season and all these things were getting overhyped, and now everyone's got wiped out. And I think maybe they might start. They went from being like over farmed to maybe potentially now they're being correctly farmed or under farmed even potentially. So I don't know. It's interesting to do this. I'm not doing this with like massive amounts of size. It's more like on a bunch of different wallets with relatively, you know, small size in each. So, you know, that's why I'm comfortable having exposure to some of these newer nascent perp dexes, but like if I was doing this in a very large way, I would just do it on Hyperliquid because it's the most reliable, the best user interface, the deepest liquidity and stuff.
Yeah, but hype on Hyperliquid funding rate tends to be kind of lackluster, which is why I like Drift. But I agree.
Yeah. One thing that's could be interesting to go take a look at, I don't know if you want to, but is how all these counterparty vaults handled, the market drawdown.
Lighters didn't do well, isn't that right?
Lighters did not do well, so they lost money, and I think that they are compensating people both with stable coins and with points, apparently. So if you were in the LLP, it sounds like, may be compensated. I think they have like a 5% drawdown, roughly, something like that, on the LLP.
5% drawdown is hard to compensate for. So even at 50% APR, that's over a month.
Yeah, well, you can see it right there. That's the day right there, isn't it?
Yeah.
5 point something.
5.35.
Yeah. And then, yeah, I mean, look at that. Yeah, not great. It is interesting, though. Like, yeah, it's like it was like a straight up and to the right number.
365 days of a turkey.
Exactly right. Yeah. Yeah, so that's brutal. So they're apparently compensating with points and with actual dollars. I mean, dollar-wise, it's a lot of money, right? I mean, it's like $20 million or something. I don't know exactly the numbers, but it seems like it'd be roughly $20 million. Seems like a big compensation they'd have to give away if they're really going to give people stable coins for that. They also, don't take fees, right? That's one of the big things about them is they hadn't been taking fees. They did just turn on fees. So you can now have, kind of interestingly, there'll be a free version where you have lower latency and I think some other things, or you can pay, you can pay the normal fees and then you get like the pro version, which is like, the normal kind of service you have. I don't love that as like a policy. I guess they're trying to be like Robinhood where like, on Robinhood, you don't have to pay the normal fees you would in TradFi, but then you get front run by Citadel and all the other boys.
You lose money that you're not realizing you're losing.
Exactly. Yeah. So like, I guess if they're going super retail, like Robinhood style, it makes sense. I think Hyperliquid's system probably just makes more sense in this case. But yeah, so that just got turned on. I think they have been charging some people fees from what I've heard, like market makers and others. So maybe they made $20 million and they'll just have to give it away. We'll see. But compared to something like Hyperliquid HLP, which made $40 million, I think that made 10% or something like that. We can go look at the exact numbers, but
no way. A 10% gain on the day?
I think so. I think it's like a $500 million like pool and they made $40 million or something.
Whoa. You're right. Look at that.
Yeah. It's pretty crazy.
That's crazy.
Yeah. So maybe not quite like a
122, so $40 million, like, $42 million.
Yeah. Yeah. It's a lot. It's like, 8% or
past month return, 161% APR.
Which also makes you think all these sexes, which have their own internal market makers, like which is kind of equivalent to this. Yeah, the YTs on Pendle for this are insane. They're like 8 bajillion%.
Wow.
Yeah. Yeah, but also like Binance, who has their own internal market makers and stuff, I'm sure did very, very well, which is probably why they were so willing to compensate people because they made an leg.
I mean, that's one of the questions though, is, you think, okay, counterparty vaults, maybe it's a play, right? Like what's the narrative? Counterparty vaults do really well typically when there's a lot of volume and volatility. Hyperliquid is one of those examples. Lighter, also counterparty vault, did terribly. So, you can't just say, I want to go into a counterparty vault to farm volatility as a heuristic because one did terribly, one did great. I mean, is it just, Jeff is king? It's another example of this? Or is it, something intrinsic to Lighter that makes it different than Hyperliquid?
I think it's a little bit, I don't think they're quite like doing the same activities. I to be honest, I don't know exactly the difference. I know how HLP works pretty well. Like this is basically,
you can see all the positions.
You can see the positions, and then also, instead of the auto deleveraging, like this is a vault that can step in and take the other side when people are being liquidated, essentially. So, the advantage for HLP is that when there's a lot of volatility. Yeah, because like in the case where I got auto deleverage, they're also the other side of that. They're the ones stepping in and buying at very low prices or being able to short at a very high price.
Oh, I see what you're saying.
When someone is getting liquidated. So it is advantageous to be HLP. I think Lighter one works slightly differently. I'm not 100% sure what the difference is, but I think that is the reason why they lost. JLP also did well. I don't think it did quite as well as HLP. I think it only made like $5 million, and that has like $2 billion.
Because no one is using Jupiter.
Well, that's not true. It's the APR for it is still insane. Like I don't know anyone who's using Jupiter.
It typically hovers around between 15 and 45%, which consistently blows my mind.
I like literally, I don't think I know a single person who's using Jupiter for perps, but it's still 15%. Like even today, it's 15% on the JLP pool. So someone's using it because there is $2.1 billion sitting in there earning 15%, which is just so wild.
Yeah. Good for them. Good for them. So I wanted to speak about, well, let's look at ALP first, but then I want to talk about like the other winners that were kind of expected, but I think forgot about. So ALP here, 26.23%. This is recent, isn't it? This is like this.
Yeah, I literally don't know anything about it. I think it just launched yesterday or within the last couple of days. Does it tell you anything about?
That's what I was looking at. They do show us. So I thought ALP existed from back in the day, like Alpine or whatever they called this thing before it became Aster.
Could be. I mean, I guess it says it's been around for a while. Is those days?
Yeah, but this is the 14th of the 5th month of the year, so May.
So maybe this is not the equivalent. Maybe this is some other product that they've onboarded and not their own ALP. It could be wrong. It doesn't really give a lot of info. Or there's a learn more down at the bottom there.
That's gonna take me to the docs.
Love a good docs. No, it is Aster ALP.
Yeah, so I guess it's been around for a while. But there's ALP price. Yeah, I think this is the same ALP from, I think Aster turned into Aster, but before it was something else. It was like blue themed. We used to use it a lot during the old competitions in the dojo.
Yeah, I think that's right.
But anyways, 26.2%. It doesn't look like they had a substantial, like there's no big spike here that would indicate they made a killing or otherwise. Also, I think Arbitrum is different. Yeah. Different APY. So these are separated. They're not like a unified ALP cross-chain. Kind of weird that they would do it that way.
I mean, that's how GLP was back in the day. There was like the Avalanche version and the Arbitrum version. And
yeah. Well, I think ALP came out around the same time. And they're like more of a spiritual successor to GLP than they are to HLP in that sense. That's my understanding. Don't quote me on that. I could be totally wrong there. But the other one that I wanted to point out was Liquidity. And also shout out to Liquidity for giving me my flowers there. They did a post about my prediction. So if you guys remember, those of you guys who are read Steven stuff maxis, I said that Liquidity stability pool vaults were one of the best ways to be long black swans. And sure enough, people holding SBold or people who had staked Bold made a 3.6% one-day ROI for doing it. Now it's you're going to get 5 to 7% APR 90% of the time, 95, 98% of the time, like almost every day. You're getting a basic APR. But then when lightning strikes and there's a massive drawdown, you're going to get this crazy outsized return because all liquidations are happening. And if you're in like something like SBold, which auto compounds those liquidations back into more bold, you're buying things at a 5% discount sometimes and then selling those immediately and then compounding that back in. So 3.6% ROI for one day. I haven't even checked today because today we also went back from 115 to 111. People may have leveraged back up. So I like these, and I was making the case for the YTs for a while, saying that if you wanted to just have some Black Swan protection, buying some of the YTs would be the way to go because you can typically buy them around like 6 to 9%. And then you have one day of a 3.6% ROI, which is a 1 day 1000% APR. It tends to push your average up pretty substantially. So also you can buy like Black Swan. So if you have rumors of a tariff up and coming, I think we had like, I don't know, 8 hours to act on the tariff news before everything crashed. You could have gone and bought the YTs then to prepare for that if you were like really dynamic and fast.
Yeah, it's an interesting hedge because right now the YTs are offering 89x exposure to this. So
exactly. So 89x times 3.6 is your 90 times 4. We'll call it. It's roughly 36x. No, 3.6x.
3.6x.
Is that right?
Yeah.
Am I crazy?
That sounds wrong. 90 times
4 times
3.6.
360. So 3.6x,
Yeah.
right?
Yeah. Mm-hmm. Yeah, it's a very cool thing. I mean, I kind of like the bold like YT still. I like YTs that offer so many different potential. It's
Well,
like a choose your own
way to
adventure.
express your thesis, right?
Well, it's a choose your own adventure, and you have a bunch of possible outs. Like I don't like the ones where it's just only points, but like for this one, you get the potential of Black Swan protection. You get actual carry yields like in the meantime. And then also, this is going to be the thing that receives a bunch of airdrops from all these like Liquidity V2 forks. So like that
Yeah.
could also be, a meaningful APR in the future. So it's kind of like got a few potential outs where it could be a useful thing. And just in general, really like the Liquidity team. So hats off to them.
Yep. Hats off to oh gosh, I'm gonna call him Bojan, but that's how his name. Bojan? Bohan? I forget, man. I'm so sorry. He's gonna tell me later how to say his name. Anyways, this has been cool. There's a few of these. So Liquidity is obviously the biggest version of this. Then there's a bunch of friendly forks. One of them is Asymmetry. I think Asymmetry also had a bunch of liquid. Well, maybe not. Maybe they did though. They're like mostly stablecoins. There's then Felix. I haven't checked Felix. I bet they also made a killing there with Hype because Hype went down to didn't Hype go down to like $25 or lower?
Not 25, like 36 or something like that.
No, it was at no, I went lower than that. I think.
Did it? Could be.
I think so. Let's go Hype.
Well, this is going to be like what do you what market do you care about? Like the Binance one?
Yeah, I mean that's pretty deep, right?
They don't have, maybe it isn't. Yeah. What is this? This is
$20.
arguments. Wow. Also an argument for just like, setting stink bids. Like people that had stink bids in there had a great day. Obviously a very, very long game to be playing, but if you set your stink bids at $0 for Atom, you had a lot of fun.
You got infinite Atom. Yeah, I saw that.
It's up 36,000% apparently from all time lows. So
that's remarkable. Congratulations to anyone who's doing that. Who still believe. I checked out Prism yesterday.
Yeah.
I think Prism is it's the Pendle of Cosmos, and I really wanted it to be cool. And there's a bunch of 19% fixed day things over there, and they're doing a bunch of other. I don't know. They pivoted at doing everything because you just need to try to attract people. But there was a 6% price impact on $100 PT mint. 6%, and at $1,000, it said no, you can't do it. It'll affect the IY too much. Maybe
Really?
maybe you could do limit orders or something. They did have limit orders, which I appreciated, but yeah, it's just frustrating because I want to be some other cool place where I can go get yield. And typically Cosmos dApps have nice front ends. They have like a user experience that I actually kind of enjoy. But then just like there's no liquidity, and that's always been the thing that has killed IBC. There's no liquidity.
Mm-hmm. Yeah, that's true. RIP to IBC, I would say.
Yeah. Okay, so let's continue on. One of the things that I wanted to showcase. Well, actually, I bet FFX made a killing too. They're not showing us, maybe not, but they also have a stability pool. Typically, stability pools are one of the greatest beneficiaries of liquidations. So, checking them out. We should also check out.
Wait, also the Monad airdrop's happening, right? Soon? Today? I think it's today.
Oh, I have a picture. They gave me a card.
Yeah. Congratulations.
Maybe I'll get something for that.
I've heard it might be worth nothing, and I've heard it might change your life. So who knows? We'll see.
Yeah, everyone was selling an Arbitrum for 60-something thousand, right?
Yeah, I think that was a joke that everyone started copy pasting. But yeah, apparently they're also, so there's like 5,500 of these cards, but then they're also airdropping it to like tokens to a bunch of people who use just like ETH mainnet DeFi apps. So I did not get a card. I'm not
mainnet DeFi apps.
I wasn't cool enough to get a card, but I do use a lot of ETH DeFi. So we'll see.
Yeah, so they didn't have a massive spike up, 19.47%.
So this is a few days later. So I mean, I guess you would see it in that chart. So
yeah,
probably nothing.
Because the price is a very consistent step up, so they probably normalize things over time. Okay, so one of the things I wanted to point out is Neutral. I think goes live. Neutral and Strata are two other ones I want to look at. Neutral because I think their pre-deposit campaign is live, like as of today. I didn't check to see if it's like live, but it's going live today.
So it's live, but not. Oh, okay.
Looks like I can't launch it. Let me refresh. No, so I can't. So they do have a pre-deposit campaign that's going live today, but it seems like it's not available yet. So Neutral, we've talked about Neutral almost every single episode. Neutral is basically it's a yield vault that specializes in OTC basis. OTC basis is where you're able to buy tokens under their spot value, typically vested to you. And because you can buy it under its spot value, you can also hedge your exposure to that. And as long as the hedge APR is not like worse than the implied yield of buying it under its spot value, you make a positive arbitrage return. And so I think Falcon also does this. But Neutral specializes in this, and I think they're going to have one of the highest base APRs for a stablecoin out there. Season 1 as well. So Season 1 is kind of exciting. Typically for stablecoin products, I think it's going to be a $50 million cap for Neutral. Mm-hmm. All this current $52 million is like the pre, I don't know what you call it, beta testing or whatever, TVL. So none of this is like part of that new $50 million they're going to do the pre-deposit campaign for. So anyways, keep this on your radar. I'm fairly certain it goes live today for the pre-deposit campaign. Maybe there's another link for that. Maybe it's like one of those, go deposit into Veda or who knows what. But that should be live today.
Right. Okay. Nice. What other stablecoin? Oh, Solstice. That's one.
Yeah, I was looking at Solstice. Unfortunately, their points are a little bit wonky, so you can't actually see how many points you have. But, base 7.62% yield, which is pretty good. Loopable and leverageable on Camino, also pretty good. Points there, you get 5 points per dollar per day for holding or lending USX, and then you get 1 point per day per dollar for EUSX. So if you're 4x leveraged on Camino, you're getting 4 points per dollar per day, plus around a 15 to 18% APR on 4x leveraged EUSX position. I know a lot of people have been doing like just holding it because there's this weird thing where if you hold it for a certain amount of time, you get this crazy multiplier. Also, LPing is pretty good. One of the things to note here is that you can get boosts for adding partner protocols codes. So Camino is KMNO. If you add it, it's going to show me where it is. But no, it won't show. Oh, no, it's not showing me. But down here, I think I have to check my wallet. Down here, there's like a place to add partner codes. You can add KMNO. You can add Orca. I think you can add Radium. And then, of course, add code Dojo for the 1,000 points. We're trying to get it so they actually give you a percentage of points back. But they're working on that. So that's Solstice. Season 1, I do think is going to be exciting. They already have $211 million of TVL, which is pretty substantial for a Solana stablecoin. I think that's the largest native Solana stablecoin. I'm probably wrong there, but it's definitely one of the largest native Solana stablecoins that has yield, at least.
That's great.
Care is the only other one that I know about. I mean, there's also that one that does payment fi.
What about Cash?
That one? Oh, Cash is probably huge, but Cash isn't yield bearing.
That's true. Okay, you're right. Fair enough.
But there is a payment fi one that I forget the name of that I know people in the dojo were farming points for. It was one of those ones where it was very, very, very similar to Noble, where you could choose points or you could choose yield, and the yield was around 15%, or you can get points. Exponent's going to have Solstice soon. So Exponent is what I call like the pendle of Solana. There's also Rate X, but I know they're going to Exponent first because Camino is more aligned with Exponent, and so getting those PTs on Camino in the same market could be pretty cool. And then of course, go and get a fixed day APR over there. The ones that I've been looking at are like Shy USD, which is the high low we were just looking at 20%. Some of the ones that probably got absolutely nuked in the past few days, but could be cool overall, would be the X Sol. So I was talking about this with one of the whales we know, and the reason why it's interesting is because even though it's a dirty kind of it's a dirty asset. The reason why I say that is because it's not a fixed leverage. It's very similar to FFX version 1, where the leverage is dependent upon the people who want leverage versus the people who want the stablecoin yield. And so depending on that ratio, the leverage of XSOL will change. It typically hovers between 1.4 and 2.5x exposed leverage to SOL on any given day. But on top of exposure to that, you're also getting 50% yield. So you can have like a 1.5 to 2.5x Solana position and 50% yield on top of that fixed for the next 42 days. So if you could, dirty hedge it, say, with like a short on SOL, this could be a good play. But of course, it's impossible to actually hedge.
Right. Right.
But 50%, it's pretty dang good. Low liquidity.
It's a big number.
Yeah, it is. It is a big number. Yeah. All right, cool. Let's go check out actually, Strata was the other one. So Strata went live. Season 1 is live. Good for them. Strata, as a reminder, is a place that's going to have like a marketplace for senior and junior tranches. So the first one they're showing is Athena. Oh, that's kind of cool. I like that they show that. So coverage basically means that Athena could take like it's 124% over collateralized. So I think that basically means that they could take like 24% loss on the NAV of USDE, and SRUSD would still be unaffected, which is pretty great because of, Athena's like never taken an NAV loss that I can remember. Maybe they had a couple of negative days. Then junior USD takes on is the coverage, right? It's like effectively like an insurance pool. It's the coverage for that. As a result, it gets 1.6x exposure to yield. So whatever the Athena yield is, it's getting a 1.6x multiplier on that, which is cool. And it's also getting points, of course. Both of these are on Pendle, and maybe it's worth it. I wish they would show the actual Athena underlying APY so you could compare it, because if you don't see that, you might think, man, 4.6 and 5.9, that's terrible. But my understanding is that Athena's actual yield has been pretty lackluster for the past week. But like a junior tranche at 6% seems low.
It does seem low. Yeah.
But yeah, so I mean, it's been up the past 3 days, 8.53% today. And it looks like the senior tranche is almost fixed at around 4.6. So it's live. They're gonna have points, so you can use SUSDE aggressive DeFi to earn Strata points. Okay, well, yeah. So go earn some points there. The Pendle stuff is a great way to earn Strata points. 60x for liquidity, 60x for YTs. This is probably why the senior tranche has such a high implied yield. And then 20x for junior tranche liquidity and junior tranche LPs or YTs. So yeah, I mean, go check out Strata. They're also going to do, I think HLP is like the next thing on their radar. So they're going to abstract the risk from HLP. I think the junior tranche probably would have made like a 20%, some crazy like 15% daily ROI on that wild day. So that's kind of cool. But yeah, I'm looking forward to more Strata stuff.
Yeah, same here. I think it's a very cool platform.
You sent me a few links, like HIP3.
Yeah, I mean, this basically means this has been a long-awaited thing where essentially, it will allow more easily for people to create markets for Hyperliquid. So Hyperliquid is kind of aiming not to be the perp dex that everyone has to go to, but the underlying tech where people I think Phantom was one that their perp platform uses Hyperliquid underneath, which is kind of interesting, like Phantom, the Solana wallet, using Hyperliquid as the underlying tech. Anyway, this will make it more easily to have different markets, to have different, front ends for Hyperliquid. The notable one is Trade. I think it's called trade.xyz. And they, for example, are going to have, I think it's run by the same team from Unit being people that do UPump and UBTC and UETH on Pump, the spot, basically all the spot tokens on Hyperliquid are done by Unit. I think they're also doing this thing called trade.xyz, which is another front end for Hyperliquid, but they will also have other kind of more risk on pairs like TradFi stocks that have perps, which is kind of a crazy idea. But we'll see how that works. I mean, it seems a little bit scary that, normally they should be able to be arbitraged between the actual price they're trading at during market hours, but what happened during non-market hours on a perp platform, it could be very interesting to see. So anyway, I like when people try new things and innovate, and I think that this is one of the ones to keep an eye on.
So what does it play here? How would you benefit from this?
Well, it just means that more income for Hype, which probably means more buybacks. It also means more front ends for Hyperliquid that may be worthwhile going to try out. And, you can more and more and more perp platforms to go and try out and hopefully get an airdrop from.
But all using the same.
Also using the same tech, but of probably also having their own token, like Unit, for example.
All right,
yeah,
I'll take it. I don't mind free money. You can throw airdrops at me, so that's cool. Yeah, and then you also sent me this one. This is what
I was just saying about equity perps, which is kind of crazy. How this is going to work, I don't fully understand it because you'll have 24/7, 365 on equities, right? So
you guys can It said it's live now. Don't rug me.
I think there's a waiting list, so I think you have to get invited to use this thing or something like that. So maybe we can get an invite and try it out next week. We'll see.
Yeah, maybe. There was also the accept. Let's see. Requirements not met. Oh, you're right. I do like the background though. Very fancy.
Yeah.
Yeah. So I was wondering about this because you can already buy and sell synthetic stocks on Solana, and so there was the flash crash on Friday aftermarket, and I was thinking, well, couldn't you like? No, you couldn't. You could potentially buy them under peg, but you couldn't like short them yet. But there probably is some edge to 24/7 trading of things that traditionally only have like during market hours. And I don't know what that edge is yet. I'm sure there are plenty of strategies, but synthetic stocks will probably have a really big narrative eventually once the arbitrageable opportunity is clear.
Mm-hmm. Yep.
Until then, we're kind of in limbo. The other, I mean, yeah. So looping the CRPUSDC is still fairly positive. I was going over here to check out EUSX. It's at 5%. 5% times 4x. I mean, really the best thing to do is lend at that rate. So if the net APR is only 4.8%, probably lending USX is around 6%. And it's not showing me. That's frustrating. Borrow USX. Yeah, so the supply APY is 7.11%. So if you're supplying 7.11% and getting the 5x points, it's better than 4x leverage getting 1x times 4 or 4x points. So it's just one thing to consider. And then finally, you sent me this. Can you explain this to me like in 5?
Yeah, I mean, this was just a little bit of humor. Was just that yesterday, Michael Saylor, our savior of the Bitcoiners, posted that the strategy had bought 220 Bitcoin at an average price of 123,500, which it was just pointing out that he always seems to be able to top tick the market. It seems like he bought these, like the day, I guess, it says as of the 12th. So somehow he bought it last week, but he got like the top of the market price rather than after it crashed. So
yeah, that's so close to the top.
So close to the top, and he always seems to be buying the top. I mean, maybe that's why we have tops, is because he goes in and buys. But
brother, how are you so bad at buying stuff? Yeah, I mean, people call him stupid, but he's made a lot. He has some ridiculous amount of Bitcoin.
Yeah,
and then 1, 2, 3, 4, 5 different derivatives of Bitcoin exposure with all of his stocks.
Yep. That's what we need. We need to be able to have perps on MicroStrategy stock. That's really
remarkably bullish.
Yeah.
And then I mean there are actually a lot of things that I haven't gone over, but cap. People like this. People are hesitant to it. 9.65% APY. Can you remind me again what cap is doing to get a yield? Because I don't understand it.
Yeah, I mean it's kind of just like borrow lend essentially, but it's backed by like restaking. So like you can go here and get a very cheap lending of your asset. I think like for example, there's that concrete market, so that you're like collateralizing, let's say like Bitcoin, and then you're borrowing like the cap stablecoin against it. The rate is very favorable. So 3% here, for example, you can borrow like $2.8 million. And then this is where it gets a little bit wonky. I'm not 100% sure the right person to explain this, but then, if there was ever bad debt or something like that, it's the restakers that then get slashed. And
so the restakers are the ones who are putting their Bitcoin here?
No, this is just like a CDP kind of thing. So you're collateralizing your Bitcoin, you're borrowing the cap stablecoin, and then there's additional kind of like the way Aave has Umbrella, they're using restakers who are earning a portion of the yield that's being generated through these off-chain agreements. But then if, for example, there was bad debt on these Bitcoin, the restakers of assets on Eigenlayer and Symbiotic and stuff like that would get slashed. I think this is the only like first real use case of restaking I've seen. Like it was such a hyped thing, obviously, and I was also very into this, but I think this is actually the first protocol that actually really uses restaking and benefits from it. And I know it's being super hyped. I know people seem to think this is going to be really big and really hot. So whoever Concrete here borrowing $2.8 million against their Bitcoin at a rate of 3%, doing pretty well for themselves. So
very true. Very true. Okay, well, we can end it there. There is also like reservoir loops are also always pretty good. Season 2 points, you can go farm those. New stuff I was looking at yesterday. I'm still in the pendulum position there. I think it's about to expire. PTs, I was gonna check out a bunch of these are expiring, so I just want to like highlight the fact that there are a bunch of expiring markets coming up. So if you're looking at stablecoins, 1 day on the Strata pre-market vault, and then 8 days on things like Almanac. I think the other one was USDAI. The Gaib one is expiring fairly soon in 15 days. That I think the cap's about to increase on that. So we may see some IOI compression there. One thing to consider. And yeah, guys, thank you so much for watching. As always, if you ever have questions or comments about the stream, drop them below and they will hopefully get answered. I'm not 100% reliable on doing that, but I try. And have a wonderful rest of your day.